Hello, dear traders and investors, and let's touch very important theme that actual not only for speculative traders but also for investors. It's risk management. It seems that it's not affect investors. Why I need to listen and educate a lot of information about capital management. Here are a lot of professional traders who managing DEMA or PAM accounts, and you can choose any of big variety of profitable signals or simply take Robux that do understandable how to use. But I really understand how this fund, this manager, or this strategy works in reality, and how management account working in the financial market. Maybe his profitability is a way of lucky. It can be, yes. Maybe it will have some troubles when market and volatility will change. Maybe it will be working stable in the very, very strong period of time. So it's a probability, yes? As investors, we don't know such things. As traders, we need to control our emotional risk according with risk management plan. I'll give you first some knowledges about risk management of speculative traders, because before you will invest, or if you are a trader, you need to understand key statistical indicators that can lead to advantage on the profitable system. So I'll show you a picture. So, okay, look here, and these key indicators here. The first one indicator is percent win, or how much trader can achieve winning positions with profitable results and how much losing positions. Second, profit risk ratio. It's simple math. If trader has 30% of winning trades and profit risk ratio less than 2, of course, he will lose money. Imagine, if you have 3 positive deals and 7 negative deals with risk $100 US, so math is simple and will show us even without commissions you will lose $700 US and win $300 US. What you need to do? You need to find appropriate ratio. Okay, for example, if you have profit risk ratio 5, math will show you that trader will achieve for his 3 positive deals $1,500 US and will lose $700. Without counting commissions, trader will finally achieve result $800 US for each 10 trades. Of course, things are not so simple, as I said, because with rising profit risk ratio, you can cut your percent of positive trades. For such successful profit risk ratio with big amount of percent win, trader can choose very strong price areas with big potential and short risk. But for such approach, you need a big experience and a lot of knowledge about market. Okay, and so let's pay attention for this picture. I wanted to add some clear what I want to say about probability, about percent of winning position, profit risk ratio. This picture very clear, very understandable, and you can see what variety of numbers and what result you can achieve. Okay, so let's pay attention for this picture. Visually, it's a good example of dependence of two indicators: percent of winning trades and profit risk ratio. You see, if trader has a small figures of winning trades, it's only one chance to be profitable is rising profit risk ratio. So here you see profit risk ratio, and here percent of winning position. You see, if you have too little percent of winning position, you need to rise your profit risk ratio. And big numbers of these indicators will guarantee you quite a stable trading system. But once again, do not forget, it depends on your trading strategy, key levels, key prices, and potential. And you need here a lot of experience to understand if you can achieve this potential with profit risk ratio, for example, more than 4. You need to build a very short stop loss orders, and it must be correct stop loss orders. You need to understand key prices, and you need to understand your math. Okay. And you see, if you have a big numbers of profit risk ratio, if you have not so more profit risk ratio and a big 1% of winning position, for example, more than 50, probability that your account will achieve 0 is also 0. So these numbers is probability that your account will be 0. You see, if you have big numbers, good numbers, profit risk ratio, and good numbers, percentage of winning position, it's almost no probability that you will lose your deposit. And let's pay attention for this picture. It's third and very important indicators. There are maximum drawdown and risk per deal. This key indicator is fundamental in counting risk for your capital. Here you need to think how much risk you can involve for TIMA account or PAM account or for trading system or Robux. For example, if you see 20% of drawdown, let's pay attention here. If you see 20% of drawdown, it will be your possible losses when you invest. So if you invest, for example, here or here, you need to understand that probability of this trading system, this trading manager, you can achieve 20% of drawdown. This historic influence of trading system, you need to pay attention to this history. And then more this history, then better for you. But It doesn't matter that even if this account will more than 1 year, this drawdown will always be no more than 20%. Trading system, humans, and so on can make mistakes, and you need to understand it. So if you want to control your risk, you need diversification. Not only controlling risk, but also diversification. Not all the capital in one item, in one financial instrument. You need to diversify in different instruments, shares, obligations, and so on. But when you analyze one trading instrument or team account, you need to pay attention for historical drawdown. If you see that historical drawdown no more than 20%, but usual it's, for example, 20%, you can use it, for example, in entering points when you add your capital. For example, if you see such movement, and for example it's not 20%, it's for example 15% or 10%, you can enter for this account. You understand that it's usual drawdown, but you also understand that this account can achieve maximum drawdown with 20%. What you need to do when this account will achieve his historical drawdown, or maybe more, you need to fix this investment as negative. You see how works diversification. For example, you have portfolio from with financial instrument 1, 2, 3, 4, and so on, and you have average expectations. For example, it's 30% rentability per year. What it does mean? It does mean that, for example, this account will can give you, and historically can give you 60%, 90%, 50%, and so on. And every instrument has his own drawdown. For example, first 5%, second 20%, and so on. Finally, we need to be realistic. For example, from these 5 accounts, instruments, shares, 2 will lose their capital. So if you expect that you will close this position with 20% of drawdown, and here you will close this account with for example, 15% of drawdown, so these accounts close for you. So you lose here money, here 15% from capital, here for example 10% of capital from capital. But in the item number 1, number 2, number 4, you will reach your destination, you will have profitability, and you will have your average rentability. Because here, for example, 15, 50, here 90, and so on. Maybe this 4th item show for you 300%. It's also possible, maybe more, maybe less, but you have an average numbers. And then more you have this diversification, then more you control your risks. But pay attention for this drawdown. You need to understand when you need to leave this account, this investment. It's the same way as you work with shares. So you have, for example, a share. You have one price. When you see that if this share, this instrument will reverse, you will leave this position because your picture changed and you need to change your mind about this instrument. Okay, let's continue. And you understand, once again, you need to choose, you need to understand that you can choose bad timing for investments. So once again, you need to understand your risk connection with quantity of relative drawdown. And abilities to analyze these numbers and to understand traders' math statistic will give extra advantage not only for speculative traders, but also for investor who will try to select direction for his investments. Furthermore, if you determine your portfolio and amount of risk, you can, and better, you must protect your investment with risk management program as a trader and as investor. And here we are speaking about the foundation stone in controlling your trading and emotional stability according with risk management plan. This risk management program will give you an additional advantage as personal trader, especially in times of negative emotional influence as team manager, to be responsible to investors for agreed and approved risk management plan and expectations. And I can say you that for every team manager, it's a big pressure to ruling not his own capital, and emotional stress, emotions. It's something like feelings, and not every kind of man can control his feeling. But this program will give you an advantage. This program in our company can give you absolute, not absolute, but very, very strong defense from this emotional stress. It will defend you from tilt, from when you overtrade, from overtrades, and you can and you need to use it. And so, okay, let's pay attention for this picture. In your private cabinet, you'll find risk management conditions. It's a screenshot from your private cabinet. Choose the account where you plan to use risk management program and fill columns. And my advice, of course, it's your deal and it's depend of your comfort zone. But amount of risk better to count in percentage than in absolute numbers. Then let's fill your total risk management conditions. So it will be risk per one deal. Order risk. It's risk per one deal. Here you choose percentage or US dollars, absolute numbers. As I said, I advise you to count in percentage. Then risk per one deal. Order risk. Then risk per one day, daily risk. Risk per 1 week and monthly, weekly risk and monthly risk. It's very important to fill all these columns. Why? Because, for example, if you achieve monthly losing limitation program, monthly losing limitation, so for example, you have 3 deals per day. You have, for example, 6 or 7 deals weekly plan, losing streak. And for example, you plan to lose no more than 10 deals per month. Why it is so good? When you achieve these numbers, the program will automatically disconnect you from any possibilities to trade in this month. So you will have enough time without losing money. And it's very important, without losing money. When you want to overtrade, when you want to come back your money. So, and you, at this time, when you disconnected from your trades, from your account, you can analyze your errors. You can stop, and you can think why you're losing money. What the reason? And this risk management program is good pill from emotional illness. And you know, statistics shows us that more than 19% of traders have this emotional illness. And even if you can't stop awful trading, this program will do it instead of you. And it's also very good for investor who invest in demo account. This service will give additional guarantee from sudden traders' errors. And finally, maybe you're still thinking if it's better to work without any risk management program, without stop loss orders, simply trying to overstay drawdown. It is possible? So yes, it's possible if you are trading without leverage, and it can cost for you years of waiting. Let's look at this simple and ordinary example. Even if you choose strong levels to trade, for example, you see the price holding this level or price holding this level, and you decided to work without stop losses. Simple, you enter in here or enter in here. Yes, of course, some price movements, for example, such things will not damage for you. For example, if you have here stop loss order, but you can re-enter in position and it will be more clever. Why? Because if you don't have any stop loss orders, if you don't have your risk management program, you can receive such a movement. It's not a question, it's not a big trouble if you have leverage 1, but if you have leverage more than 10, you can lose all your deposit here. One simple movement. And such systems as martingale is very, very danger, because you can add here, and price can never return to these levels. You can see lower and lower and lower. It's a trend movements. And if you will analyze a lot of accounts, Steamer accounts or Palm accounts or trading signals, you will see that a lot of accounts show quite a good profitability year by year, month by month, but one day you see that leverage rising and account had immediate drawdown. Why? Because leverage too high, it was martingale without risk management program, and then if you're investor, it's your pain. So, unfortunately, emotional factor too often leads to overtrading and big losses. And once again, this program, risk management program, will give you extra additional opportunity to fix these emotional problems. So, okay, finally, don't forget, saving capital, your first and the main aim. Second, you need to, so first, saving capital. Second, you need to outperform banking deposit rate. And if you understand that you can save your capital, that you can control your risk, it's a big advantage. It's business. It's not a gamble. It's not a game. It's business. And you need to be professional in this business. What it does mean, you need to count your numbers and your statistic. So, okay, good luck and see you soon in our webinars.